So hello and welcome to another video of Coffee and Stocks. In today's video, we are going to quickly talk about 5 stocks to look for this week if you don't already have a position in these companies. But before we get started, how about we get some coffee? Alright, so let's get one thing straight, and that I am not a financial advisor, so don't take my words as advice. Please don't forget to drop a like on this video as well as a subscribe, because it really does go a long way in supporting the channel, and I really do honestly appreciate every single one of you. So let's see if we can get to 200 subs, and then I will do another giveaway like I did last time. Some of these companies I'm going to talk about are some fan favorites, as well as other companies who I personally haven't talked about. Now, since many of you investors love investing in SPACs, the first one I want to talk about is Churchill Capital with a ticker symbol of CCIX. They're going to do a reverse merger with Multiplan. Now, I don't want to make this video super long, so I'm not going to go too much into detail with companies. But Churchill Capital has been running for around $10.89 as market close Friday. Nothing has really happened with this company lately. Back in May, it actually went down 2,000%, as well as it went up 2,000% the next day. So that's something weird that I saw. Honestly, it's been trading sideways so far. If you look at the Multiplan website, which they are merging with, you can see that they are trying to find flexible, or obviously flexible customizable strategies for reducing the cost of healthcare for medical and dental payers. In the investor presentation, you can see that they have an estimated of $1,105 million in revenue in 2021. That's a projected, like, that's freaking amazing, right? 806 million 2021 adjusted EBITDA, and 437 million 2021 LFCF. Obviously, among other great looking numbers. Here, crazy comparison here. In 2006, the company was valued at $1 billion in 2011. Now they are projected to be valued at $11 billion, which is amazing growth in the matter of a decade or so. So this is definitely a SPAC to keep in mind, since their numbers do show us growth as well as projected great revenue. For our second company to look forward to, we have a fan favorite, and yes, that's Workhorse. Now, I know I've made plenty of Workhorse videos, and many of you might already, might be annoyed about this, but honestly, if I'm super excited about a company, then I'm always going to be talking about them, and I'm not, going to go into detail again in this company. But let's see their trading graph as of late. In Friday's close, we see that it was trading for $23.69, which has an increase of 5.81% in one single day. I mean, that's growth right there. In one single day to be up 5.81%, that's pretty good. In the 1 week chart, we see that it was trading for around $17.85, then had an incredible 32% increase to the current price. Obviously, I'll skip the whole month chart, but we will go back to the 6-month chart, and that's because the 1,318% increase speaks for itself. I'm actually, for some reason, salivated about this, and I know it's disgusting, but this is an absolute incredible growth within half a year. And I know for a fact that there's way more catalysts coming up, like the USPS contract coming, and that will boost up the price of Workhorse. Obviously, there's other catalysts and some other news, but coming up this week this coming week should be another very positive week for Workhorse. Now let's go to the third one. We have an interesting company called Palantir, which isn't publicly traded yet, but they did receive a value of around $10.5 billion ahead of direct listing. Palantir builds the world's leading software for data-driven decision and operations. Palantir said its updated prospectus on Wednesday that it has 1.6 64 billion shares outstanding as of September 1st. Based on the average private market transaction price in the latest quarter of $6.45 a share, the company is being valued by investors at just over $10.5 billion, which is actually below Palantir's valuation of $20.4 billion in 2015 funding. So do take that into consideration when or if you invest in this company, as Palantir gears up for its stock market debut. The company has a long way to go to convince potential shareholders that it's worth the $20 billion price tag that investors gave it almost 5 years ago. The challenge for Palantir is to convince investors, right, that it's more of a high growth tech company than a low margin consulting services firm. In recent years, private investors turned bearish on this company, with many large funds making down the price internally as growth lagged and costs soared. In the first half of 2020, Palantir total revenue jumped 49% to $481.2 million, just over half its sales coming from government customers. So cost of sales and marketing and research and development dropped, allowing Palantir to narrow its net loss of $164.7 million to $164.7 million from $280.5 million. So this company is something to have on the watch list first before you invest, since they are doing better, and we see in the second half in 2020 how they do when you might want to invest. But please do your homework first, since they do go public September 23rd of this year. So if you want to invest, please do your homework beforehand. Let's go ahead and go to our fourth stock. We have TRNE Acquisition with the ticker symbol of TRNE. They have traded for around $12.50, and around August 25th, there was a huge spike from around $10 to $11, and I know that's not much, but that's a 10% increase. And then a 23% increase to $12.50 soon after. So this company will do a reverse merger with another company called Desktop Metal, and they are a leader in mass production in turnkey additive manufacturing solutions, offering the fastest metal 3D printing technology in the market, up to 100 times the speed of legacy technologies, right? The additive manufacturing industry is estimated to grow from 12 billion to 146 billion this decade, as it shifts from prototyping to mass production. Think about that, keep that in your head. Software-enabled additive manufacturing, from your computer or phone to desktop metal productions. They have easy-to-use software and machinery. They can make usage go faster and better. Desktop Metal delivers green manufacturing solutions at scale. As you can see, that their energy consumption is very low and near zero waste, and powder is highly reusable. So this SPAC is a good company to keep in mind, to keep on your watch list, to invest in, because they are creating a faster and better version of themselves while creating a greener outcome. Let's go ahead and talk about the last stock that I'm looking at this week, and it's gonna be another SPAC, obviously. Ticker symbol FEAC, Flying Eagle Acquisition, currently trading for around $12.10, which they haven't really been trading too ridiculous lately, only a 10% increase in 1 month chart. Flying Eagle is going to do a reverse merger with Skillz, and Skillz is the leading mobile game platform that connects players around the world in fun and fair competition. The Skillz marketplace helps developers build multi-million-dollar franchises by enabling social competition in their games, leveraging its patented technology. So Skillz hosts billions of casual EA Sports tournaments for 30 million mobile players worldwide, and distributes millions in prizes each month. That's millions of dollars each month. And there's a video from Yahoo Finance I want you guys to see, since the CEO of Skillz speaks of what they are doing and the merger of FEAC.
As we know, one of the things that people have been doing during this pandemic and the various rolling quarantines is playing esports, doing a lot of gaming. Our next guest's company will run 2 billion tournaments in 2020. I had to read that number several times to make sure I was reading it correctly. We're joined now by Andrew Paradise, the CEO of Skillz, which is a mobile esports platform. Andrew, how is that even possible? I mean, 2 billion tournaments. How exactly does your platform work? And I guess people are not doing anything else, or they're fitting in this gaming where they can?
Honestly, we're just getting started, but we are the leading mobile esports platform in the world. Skillz is a B2B2C technology platform that enables game developers to monetize their games through competition. And our platform powers thousands of games across the app stores. But our longer term vision, our 100-year vision for our business, is to build the competition layer for the internet.
So I have to ask this question with a preface. My version of gaming is 1980s Palace Playland in Old Orchard Beach, Maine, where you went to an arcade. How do you make money? Because the creation of your company was because you got annoyed when you accidentally hit on an ad and lost the game you were playing. So if you've eliminated that, where do you make the cash?
Yeah, so we're a transaction-based business model, and we revenue share with our developer partners so that we're mutually aligned for success by monetizing the end consumer. We'll generate $225 million in net revenue this year in 2020, and we're projecting $555 million of net revenue in 2022, so a 57% CAGR.
Andrew, what games in particular are really kind of taking off at this point in time? And I guess where do you see the industry going as far as mobile gaming goes, right? We have 2 new consoles coming out from Xbox and Microsoft and Sony. PC gaming continues to do well. Nintendo has its Switch, which is on fire. So I guess where do you see the industry moving, and how long does mobile gaming stick around for?
Well, today, mobile gaming is a $68 billion segment. It's larger than movies, music, and books. It's the fastest growing segment of gaming, and it's projected by multiple sources to grow to $150 billion by 2025. And when you think about mobile gaming as a platform, it's interactive content built for interactive devices. That's why it's becoming the future of entertainment. In terms of other forms of gaming, console and computer, they're definitely not going away. They're longer form formats today. I think we still have a ways to go to see the right types of adaptations for mobile and tablet. So in terms of controllers and peripherals, to build that longer format kind of consumption pattern on mobile and tablet. But you're already seeing mobile esports becoming, and mobile gaming really becoming the leading type of gaming in more developed markets like Asia.
Andrew, talk me through the social component of all of this. Is there a social component? What does it look like? And as we had a conversation earlier in the show about TikTok, but also about Facebook's new campus product, which is aimed at college students. Is gaming and our platforms like yours actually becoming a different kind of social network, one that may replace, even for some users, the more established networks?
Absolutely. I think when a consumer chooses to pull their phone out of their pocket and seeks entertainment, they have a lot of options. Whether it's a static form of entertainment like a TikTok or a Facebook, or an interactive form of entertainment like a Skillz. Our platform, certainly competition is social, right? and I think we really think about our onus to society of building out a competition platform that will enable the healthy types of competitive interaction versus the unhealthy types of competitive interaction. And so it is absolutely about a social experience, and it's a interactive social experience.
Andrew, I got to ask, you mentioned Asia, smartphones are really the way a lot of people around the world get access to the internet, right? They don't have standard laptops or desktops. It's mostly smartphones. I guess moving forward, do you think that it's going to continue that way, where the other countries or developing countries around the world focus more on that, and then that's where you start to see the majority of the players? Or do you think that in the US and Western Europe, we're seeing even more people switch over to mobile gaming? Or do you think they're continuing to do gaming on consoles and PCs and then supplementing downtime with gaming on mobile phones?
Well, it's a funny anecdote. When I was a venture capitalist in the 2000s, we were predicting text messaging would become huge in the United States because it was already prevalent in Europe. And I think you're seeing that in that case, the European market was ahead of the US market. In terms of mobile gaming and interactive content, we're seeing that the Asian markets are far more developed than the US market. And I think a big reason for that is we have a lot of fixed infrastructure already built out in the US between personal computers as well as landlines. You're seeing your fastest growing segments in terms of mobile actually in Africa, in terms of wireless carriers. We're actually very bullish on India as a massive mobile gaming community. There are now 350 million smartphone users in India, which is actually, if you think about that, more people than the entire United States.
Andrew Paradise, really interesting stuff. Thank you so much. You're the CEO of Skillz.
And I don't know if you guys saw, but they have a projected revenue of in 2022 of 555 million. That's absolutely ridiculous. Anyways, that was the end of today's video. Hopefully you guys liked it. These are the top 5, not the top 5, but just 5 SPACs that I'm looking at. And stocks that I'm looking at this week. Definitely gonna make some moves. Definitely gonna, do more research on them. Don't trade if you guys don't do your homework. If this is your homework, please also write notes down. Before you trade, because it's really important. Also, don't forget to like this video as well as to subscribe, because honestly, it really does go a long way in supporting the channel. If you have another topic that you want me to talk about, please comment below, and I will get to them as soon as I can. But until then, see you guys next time on Coffee and Stocks.